morning, all you wonderful money masters and treasure hunters. Welcome to the January 24th, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely love being here with you. I treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. So let's go take a look at one of our tools. This is the tool that I call From Wishes to Desires. Now, to a lot of people, ambition is kind of a mystery out there. And the dictionary says that it's an eager desire for distinction, for power and fame. But what does that really mean? The word eager all by itself seems kind of exciting to me. So let's focus on the word eager. Kids are eager for their birthday parties. Perhaps many of you are eager for your next trade out there. We're going to take a look at those possible trade setups here today. Maybe some of you are eager for your next car. Maybe it's an iPhone. Even though there were a record number of iPhones, obviously we know Hammer getting the applesauce this morning. Maybe it's just things like that, folks. Eager sounds fun, and so it shall be. So what should we be eager for? How about to live a better life or have a better family or eager to make more money? Remember, you have the remarkable ability to get exactly what it is that you want in life. The key is you've got to make it a must. You've got to change some of the things that you're eager for into musts. You got to get rid of the coulds and shoulds. That one small change from could and should to must, that will make all the difference in your life, folks. By changing coulds and shoulds into must is how you deal with what I'll call the backbone of eager, which is the desire to change your disciplines. If you want to be ready for tomorrow, you need to finish preparing for today. If you want a better life tomorrow, it means you need to start working on it today. Live in the moment, folks. Make today count because tomorrow is counting on it. So let's go take a look at these markets here. We've got Dow futures are pointed up. You've got the Dow futures trading out at 13,738, up 19 points. The ES Mini down about 1.25 points. The NASDAQ futures off. Well, NASDAQ futures are off 40. We're going to spend some time this morning. Take a look at the NASDAQ futures. Take a look at the NDX. You got the Russell 2000 out there just up slightly. King dollar up 10 pennies right now, out at $80.09. Gold pulling back, making a bearish engulfing candle yesterday, down 14 bucks. Looks like we're having some follow through today. It's at 1672. Silver up against a area of support, or at least it was about 7 o'clock this morning. We'll go take a look at that chart as well. It's down 64 pennies, off 2% this morning, trading out at 31.79. Light sweet crude up $1.10, out at 96.33. Across the globe, you've got the DAX up 20 points right now. The FTSE, even though it made that 1.272 butterfly, we'll try to take a look at that during one of the 2 hours here. That's up 42%. Maybe the FTSE on its way to its next level. The Nikkei last night up 133 points. Maybe a little bit of a bounce there. And the Hang Seng was off 36 points. The Shanghai off 19. Our call number, as always, is 877-927-6648 in the pre-market here. Just to keep you up to date, you've got Apple trading out at 461, so it's below the swing point out there. We know Apple is really on its way back into the $300 level. We'll take a look at that. A to B equals CD down. Also having a bad morning, Mellonix Technologies. Of course, I believe we've looked at this chart several times, and this has got all kinds of trouble written all over it. Well, more trouble this morning. They closed at 51.69, going to gap down this morning again, trading out right now at 41.61. Buckeye Partners, BP. L is the ticker symbol. They closed at almost 55 bucks, 54.51. They're trading out at 52 right now. Gold taking it. Logitech, LOGI, closed at 761. They're trading at 695. Netflix having a nice day out there, closed at 103. That is trading out right now at 144. Let's see, we've got what else do we have popping here? Facebook is up a little bit. The Vodafone, VOD is the ticker symbol. They closed at 26.10, trading at 26.47. So let's go first. If you're watching us on Tiger TV, thanks so much for doing that. Maybe you're listening to us on the radio or your mobile device. Remember, you can always catch this show, archive of the show on Channel 9. You can catch the live stream on your smartphone device, your tablet, just simply by going to the homepage at tfnn.com, and over on the right-hand side, you'll see 3 buttons. Click on that, and automatically you should be able to see the download. That means you can follow along with us. And if you'd like to see these charts in HD, just go and test drive the Tiger's Den. You can do that for 30 days. And then you'll see these charts in HD. So we're going to start off, what I've got on here is the daily chart of the futures contracts. We're going to start off with the daily chart. Normally we start off intraday, but we're going to take a look at the daily chart. Now we can see here the NASDAQ, which is in the upper left-hand corner. And I'll go ahead and blow these things up. But what I do want to point out to you is some divergence that's going on out here. You know, can one person make a difference? Absolutely. One person at Apple Computer, I would have to say, made a difference. One person in your life has probably made a difference. So one person certainly can make a difference. And when we take a look at the way that stocks move, though, what you want to be, can one stock make a difference? Yeah, maybe, especially a stock that has the weighting. But we're going to go ahead and rip this apart, because if the markets are going to croak here, we're going to see follow-through, or you need to see follow-through, or we need to see follow-through as a group when it comes to the other indexes as well. And as we take a look at the four quadrants, is that what we're seeing this morning? Kind of makes you say, something to think about. So those of you getting ready to jump on the short bandwagon just yet, you could be just a tad too early. But it's going to be today's trading session that will give us that clue. In the upper left-hand corner, clearly the NASDAQ is struggling, and that's because of the weighting structure with inside Apple. So the NASDAQ is going to be, you know, the real dog out there. That is in the, that's truly in the doghouse. If we take a look at the Dow's in the penthouse. The Dow continues. In fact, the Dow futures, if you take a look at the high from yesterday, the high was 13,733, obviously led by IBM out there. We had 3M with numbers out here. But the Dow right now trading out at 13,738. 13,738 versus 13,733 yesterday. I'd say the Dow here is in the penthouse with the NASDAQ being in the doghouse. Does that make a difference? Do you think that should make a difference? How about if we take a look at the ES Mini, S&P futures? Take a look at yesterday's candle out there. Was yesterday's candle a reversal candle, even considering the pressure that Apple was putting on the ES Mini coming into the close? That absolutely is not a reversal signal. If anything, that was just a pause button. That was hitting the pause button. And this could be the pause button on a continued move higher. If we take a look at the S&P futures, just take a look at the A to B equals CD pattern that we have out there, going from the November 16th lows to the high that came in on December the 20th, down to the December 31st low out there. You can see absolutely a one-to-one A to B equals CD. But take a look at that price along the inside of that C to D leg. Much more powerful than that A to B leg. And who of us, not that that really is very good grammar, but who of us out there thought that even the ES Mini would be able to have made that A to B leg out there? Got to be paying attention to the power, to the signals inside the markets. You want to be able to read the message of the market. You want to be able to identify divergence that is out there. And trust me, folks, I've got a list of divergent patterns that say that when we do see a reversal, it's not going to be pretty. It will not be pretty. It will be swift. Well, I don't know if it'll be swift. I can just tell you that there are a number of contrarian indicators out there that say there is a pullback. And today should really be it when we take a look at what, is Apple going to be the fuse to set that off? Well, right now, as we speak right now, absolutely, positively not. Because we are not getting confirming signals from the brothers and sisters out there, which really I'm referring to the other index. If you take a look at the ES Mini, so you've made the one-to-one. They took a little pause yesterday. We'll see if we take a look at just simply expansion patterns. The 1.272, you know that markets are harmonic. They typically gravitate up to other levels. You're taking a look at the 1510, I think it is. 15, even though this comes out as 1503 on the futures market, 1510 on the actual S&P, or 1509 in the S&P, 1517 on the futures market as a 1 to 1.272, A to B equals CD up. That's exactly what this pattern here is telling me it wants to do when I take a look at the power of that C to D leg right now. And no bears really having shown up here, even though we've had pause buttons, no bears showing up here and showing their cards, since January 2nd for sure. So that's on the S&P 500. Now let's go take a look at the daily chart out here on the Russell 2000. If we take a look at the Russell 2000, that had more of a bearish sentiment, more of a bearish candle, absolutely yesterday. More like a bearish engulfing bear sash type candle out there. But are we getting follow through this morning? We're not getting any follow through this morning. We know that look, all of these markets are in overbought territory. Can they continue to move higher? They absolutely can. That's why you want to be paying attention to candlesticks. You want to understand those reversal patterns, because the bears cannot hide. They cannot hide their cards. They absolutely have to show their hand to you. This is the best game in the business. Way better than, if you're a person that likes blackjack. I don't like blackjack. I want to know what the other guy has. And in these markets here, we get to see what the other guy has all of the time just by taking a look at those candlestick patterns. If we take a look at the Russell 2000, what we know here on the futures contract, it's trading right at that 1.272 expansion out there. It could rise higher. How much higher? Well, boy, if you take a look at expansion patterns, 1.618, that is headed up to Mount Everest territory. That's in the 930 range. It's trading at 895 right now. One thing at a time. Now, what is the key here? What is going to be one of the cool keys? We're going to actually see a candlestick pattern that is rarely seen. One of the rarest of all reversal patterns is what's referred to as the abandoned baby top. Abandoned baby. That sounds pretty bad, doesn't it? I mean, somebody who abandons a baby, that is pretty bad news. Well, the Japanese, actually I should look it up and find out why they've called it an abandoned baby top. But that, folks, is what we are looking at likely happening today. We're looking at the NDX 100. What are the characteristics of an abandoned baby top? Well, yesterday was a doji candle, and that is the key. Finding a doji candle where you have an island reversal, that would be kind of the Western technical name for it. And you've got a gap up from the prior day. We're going to see a gap down this morning. So long as the NDX 100 does not today get to a level of 2756.59, we're going to have a significant reversal pattern in the NDX. But all the other folks have to participate. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. And, so one of the divergent patterns out there that leads to bad results. And one stock can make a difference. It can make a difference with regard to identifying correlations that are out there. So if you're watching us on Tiger TV, you've seen this chart before. For those of you that have listened in on the show, for all those newcomers, thanks so much for checking in with us. We're taking a look at a correlation chart between General Electric, the General, and the Dow. Up in the upper section of the chart is the chart for General Electric, which came out with earnings on Friday, had one heck of a nice pop out there, and then sold off a bit yesterday and the day before, I believe. And we're taking a look at the bottom of the chart is the Dow. Now, General Electric is never going to move the Dow. What it is, it's a great leading indicator for things to come. Why? Because their tentacles are in so many different things out here. And what we're taking a look at is trying to identify divergences. Well, we've got a major divergence. I thought we had a divergence before this week. We've got a major divergence going on, even with the pop in General Electric. You can see here just simply coming back to same swing point that I'm looking at, which is right in the middle December time frame. You can see that that's all that really happened was GE got just slightly over that December 19th. But take a look at the ascension that we've got going on here, this upward move, this little almost parabolic move coming off of December inside the Dow. When you see these types of divergences, they have always led to some type of correction. I think there's other elements out there that are indicating most likely a large correction. Well, you take things, one thing at a time, one day at a time. What this does tell us is there's a correction that's coming. There's absolutely a correction that's coming. Was Apple going to be the one to set it off? Well, we'll know by the end of the day. And we'll know by the end of the day because we'll see participation with everyone. We'll see this abandoned baby top actually go ahead and complete its pattern. And these folks, you want to go ahead and print this chart out if in fact that's what it comes to, because these are really rare Japanese candlestick patterns out there where you've got a doji session here. In this case here, yesterday you had a gap up from the prior day. On January 2nd, we're going to get a gap down this morning. And as I say, it becomes an abandoned baby top if it does not, if the NDX does not get into the 27.56, 59 price point here today. So we'll see how the market opens. Now, why is it important to, I led off with taking a look at the futures contracts, the daily futures contracts, and why is it important that those participate? Well, inside the NDX, and one of the things that I did here for my clients this morning, with today being really a critical day, in my opinion, every day is a critical day, but today perhaps more important. I'm going to share with you some of the work that I do for them on a daily basis so that we can step back and analyze the markets here. And if we take a look at the NDX 100, I went back, my data goes back to, I think, it goes back several years. And from 2002, I think it goes back to, anyways, it doesn't matter when my data goes back to. But from 2002 till yesterday, there have been 11 gaps out here, 11 island reversals. And you can learn a lot from island reversals. Typically, they have a ton of meaning. I've got them highlighted here. Now I'm going to go back and so this is why today's session is so important, because an abandoned baby top, an island reversal pattern, that is a significant long-term, should be a significant long-term reversal pattern. So do you have to pull the trigger today? Did you have to pull the trigger yesterday? Yeah, if you were trying to perhaps buy the top tick or sell the top tick, I should say. But these are longer-term patterns out here. So I've got them highlighted. We'll go back here. We'll go back to the beginning, or at least the first one on the data that I've got here. Take a look at this one. This is an island reversal pattern that took place from December 21st, 2007. Didn't really complete until January 4th, 2008. But take a look at this. This is where you had a gap up here on December 19th, 2007. You ended up having a gap down on January 4th, and you created this island out here. Was that a significant reversal pattern? Did you actually have to catch the top tick to sell it in order to make money? No, you didn't. But if you go back to this 2008 time frame here, what you're going to find out is the ES Mini confirmed it with lower price that day, as well as the Dow confirmed it. Do we have that going on in the market right now? No. But if we do at the end of the day, should you hop into the boat? Should you go ahead and take a short position? Yeah. I would say you should, because now you got some double confirmation. This is, look, I know I've referred back. I always like to be able to, the easiest way the quickest way to learn is to always be able to link the known to the unknown. So if you're trying to teach somebody something, utilize that technique. Always link the known to the unknown. So those of you that have played blackjack out there, and the way to save you more money and make you more money is always get that second opinion. If you're playing against a dealer, and the dealer only shows you one card, and you've got your two cards, is that enough information? Is that enough information for you to go ahead and place a good probability wager? I say no, it's not. That second card, or that second opinion, which is what we're waiting for today, that gives you all the information that you need to make. If we come back and we take a look at this chart out here, take a look at this other island reversal. Back here in July of 2009, was that a significant move? I would say it was. How about if we come back here and take a look at this island reversal back in November of 2011? Was that a significant move? I would say it is. The second opinion, folks, that's all we got to wait for. That means waiting to the end of today. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Dow up 30 points, S&P flat. Composite down 23 points, small caps up 51 cents. Microsoft up another 18 cents today after having a nice day yesterday. You got Intel down 3 ticks, Google up $5 and change, Cisco up 30 cents, Apple down $55. We'll take a look at Apple for sure. Popping to the upside, leading the things to the upside, Netflix. How about that? Netflix up 38% right now, up $39. As I said, Google's up 5, less than a percent. F5 Networks out with numbers. They're up a nice 6%, up $6 and change. Amazon up 466. Embraer, the airplane company, ERJ, they're up about 11%, up $3 and change. Biogen, BIB, BIIB up 250. Swift Trans something up $1.80. That's up 18% out there. To the downside, Apple leading things the downside off $55. Mellonix off 12%, down $6 and change. Varian Medical Systems off 4%. That's down $3 and change. Panera Bread not getting their loaf is not rising, so they're throwing some bread out the window here, down to $3.62. McCormick and Company off $4. Under Armour down about 5% this morning. Let's go to our first caller, to Nick in Titusville. Nick, thanks for calling. Thanks for holding. How are you this morning?
Fine. Yourself?
I'm doing great. Thank you for asking. How can I help you? What did you want to look at?
SUSA.
You know, I tried to pull that chart up on the screen, and I'm not getting any. Is that selling at $1.47?
No, right. Yeah, $1.47, $1.48 right now.
Yeah, that's I can't. I'm not getting any good data on this at all to be giving you any kind of information. So I don't know what is this equity.
Southern USA Resources. They're gold mining in Ashland, Alabama.
Boy, I tell you what, I apologize, but my stock chart here, if it's right, then this is not anything I can give you any kind of information for. There's something wrong with the data feed. I apologize, because it shows it being at $3,271 at one point in time. So I've just got some bad data, and there's no way for me to do this during the show. But I tell you what, do me a favor. If you send me an email, steve@tfnn.com, because I do appreciate you calling. When I get to a different system, I'll look it up for you. And are you in it? Looking to get in it? Tell me what you're doing, and that way I can...
No, I've just been looking at it.
Caveat.
Right now, their volume today is 64,868.
Right. I got the current information. It's just all the past information is just totally blowing it for me. So again, do me a favor. Send me, if you'd like, you can send me an email, steve@tfnn.com. Reference this stock, and I'll see if I can get you some other data on it. All right?
Are you still in the gold, silver buying mode or not?
Yeah.
Okay.
Yeah. So send me an email if you would.
All righty.
Okay, thanks for calling, Nick. Apologize that the data that I've got just isn't providing us with any information.
Okay, thank you.
You bet. So let's take a look at the NDX. We can see we've got that abandoned baby top pattern out here. Of course, we knew that the NDX was going to gap down. So now let's go take a look at Apple and see what Apple is doing out here. And folks, if you don't get the confirmations today from the Dow and from the S&P, then you need to sit tight and do all the homework out there. So I'm kind of leading the horses. You guys are the horses to water as best that I can. Do the homework. If you don't want to do the homework, then go test drive my newsletter service for 30 days. And I've got the charts laid out. I've got everything laid out for you. I typically don't review what's in my newsletter service on a day-to-day basis with inside the charts, but I know that people are frothing at the mouth. Should I or shouldn't I? And so I want to at least be able to present information to you. And really, it's so much as getting that second opinion out there. You know, in anything that you do in life that's important, I would think putting your money at risk, you're always looking for that second opinion. So if we get the confirmation with the other markets moving lower, that is one of the elements that you need out here, because that is the pattern that has been present in the past when we've seen island reversals. And when you take a look at that abandoned baby top, one of the rarest. I always am looking at charts looking to try to find one. So when you see those out there, that's one of the most bearish, or bullish, because it can happen at the bottom as well, reversal patterns that are out there. So, as I said, let's go take a look at Apple. It's trading out at 455. You've got big volume already out of this. You've got a total of almost, is that right? My glasses here. Is that 8 million shares already? 8 million shares this morning. It most certainly is. So you've got 8 million shares in just the first 9 minutes. We'll go down into an intraday chart and take a look at it. Where is Apple going? Well, if we take a look at possible spots for it, you've got a untested gap up. I'm going to go ahead and blow this up on the screen. It's well below its last sign of any kind of strength out there, and not the kind of sign of strength that we refer to when you're looking for a sign of strength, which is wide price spread with accelerated volume. You had the accelerated volume. That was a candle December the 15th out there, but you didn't have the wide price spread, and that had 53 million shares. Well, you're well below that today. So where is the next lookout below area? Well, it would be this. I'm going to get rid of this because we're well beyond that. We're going to take a look at this untested gap. So that is really the next sign of strength down below. And if we take a look at where that is, that's going to be, it's either going to be at the top of the gap. The top of the gap would be the January 24th candle. That price is 425.10. So we're going to draw a couple of black lines across the screen as we take a look at it. Or it's going to be the bottom of the gap. And the bottom of the gap is the January 25th candle, and that's 443.73. So that is the next area of potential support with inside Apple out here. So let's go ahead and pull it back. We can see certainly Apple getting into that oversold territory. It has room to run a little bit lower. It's not an extreme. It's just touching, the edges of being oversold out there. So you can see how close where Apple, now blow this up on the screen, and I'll just move it up. So you'll know that those two horizontal lines going across the screen are really where you're going to find your next areas of support. So it looks like we're going to find that out today. Now, what does Apple have? Apple's got a 1-to-1 A to B equals CD down that'll take you into the 395 level. But the retracement on here, the retracement of that C to D leg says no, Steve-O. It's not going to 395 out there. It's going to 341 and 341-ish, or I will say coming back to the swing point of October 5th, 2011, $360. Can one person make a difference? Well, in the case of Apple, I would say Steve Jobs is that one person that did make that difference. All Apple is doing, it's going back to the price point that Apple was fairly valued at when Steve Jobs was with us. It's simple as that. And if you think it was fairly valued when Steve Jobs was alive, well, all it's doing is going to go back and revisit that area. So that is the 1 to 1.272, A to B equals CD down. But as I say, the Bulls and the Bears, they'll show their cards. They play their cards all the time, and it's done through reversal signals out there. Let's go take a look at some shorter-term charts here. Let's take a look at the 5-minute charts on Apple, see what is going on out there. Then we'll go take a look at RIM and see what that is doing. So where is that? How about that? I don't have the 5-minute chart here. We'll take this one right here. And in a moment, we'll have Presto Changeo 5-minute chart. There we go. So we got the 5-minute chart as we take a look at volume. Volume not accelerating necessarily. The first 5 minutes where we saw all of the volume, that was 8 million shares. Then the next 5 minute, 4 million shares. And then in the segment that we're in right now, you've got about 3 million shares going. Now, because of the gap down here on this 5-minute chart, let me see if I can do it. You know, we've seen prop desks here. I've given you my theory when you see you want to put it on a short-term chart. I like the 5-minute charts. That seems to show it the best. I'm coming back here. And so there have been several days here where we've seen this linear move down with volume really being contained very well. And to me, and that is a absolute indication of a prop desk that is, unloading their position. They're controlling the market. Now, they've got several traders, so because you're still talking about some really huge volume out there, but they're really controlling things on the way down. And that's where you see that linear line where it just never lets up. There's no retracement during the day. And it's a signature that you want to, in my opinion, that you want to look for, because you don't want to see that in an equity that you might be in. So we've seen that. I've shown that to you over the course of the last week or so. So kind of no big surprise as to what we are seeing here in the trading of Apple, especially since we know it broke that hammer. And when you're long, after you break a hammer candle, you're just simply wrong. It's just as clear as day out there. All right, now we've got the Dow up 39, S&P up 2. So you've got non-confirming signals out there on 2 areas. Small caps are up as well. So we've got non-confirming signals out there. That's why I didn't want you to jump on the boat just yet. Let the market prove itself to you. That is absolutely the best medicine that you can buy out there. Now let's go take a look at Netflix. See what Netflix here is doing other than being up $43 right now, $43 and rising. So how about the ascension here? What is Netflix going to do? Netflix is going to head to the breakout, the next breakdown area, I should say. And that is going to be from the September 15th level. That's out at a price, looks like, of $185.40. So it's moving into the downdraft. Let's put this on a little bit longer term chart. Let's go take a look at the weekly chart on Netflix. We'll take a look at the weekly and the monthly. So we can see on the weekly here, it is up and over a prior swing point. That swing point being February 10th, 2012. Now, there were 41 million shares on that week. And Netflix is going to need one heck of a lot more volume. Only 13 million shares through yesterday out there. But you can see here the downdraft really beginning up at the $211 level. Quite frankly, the breakdown. So when you take a look at a breakout, all I'm going to do is really reverse the chart. And when you look at something coming back to a breakout area, which is what you want to buy, what you want to sell are breakdown areas. And what you want to do is you want to go to the smallest volume bar before you really see the breakout or breakdown. In this case, it's a breakdown if you're watching this on TigerTV. So it's the weekly chart. And you want to be able to identify the area where it would be that you would consider putting on a position out here. And I'm not suggesting that you necessarily go short Netflix, but we can take a look at the chart. You do want to wait for candle signals to go ahead and give you the reversals out here. And so if we take a look at you get wide-ranging bar down on the week of September 16th. You had real volume come out of this thing on the week of September 23rd. But as you take a look at the volume bars on the lower part of my chart out here, it's really this bar that sticks out, which is 9/9/2011. That is where the breakdown occurred. That says that what Netflix could actually do is move up to the 221 to the 203 level, and that is on the weekly chart. If we go take a look at the monthly chart out here, monthly chart shows you that it's inside that wall that is trying to crawl up, which is the month of September 2011. Major volume out there. You're not seeing that on the upside out here. So we'll watch the way that this trades. Today is not certainly a short day as there's no reversal signal out here. In fact, if anything, it's up over resistance areas and is headed on the daily chart most certainly into this September 15th level. And so daily, weekly, monthly, just take a look at that. We can see also getting into where extreme overbought conditions. In fact, I don't know that it's ever really been up this high. So it's got to work its way off at some point in time. That could be nothing more than just a sideways move out there. That is on Netflix. If we go back and actually take a look at the futures contracts here of the NQ, well, I'm going to first just start off with the NQ out here because, these are tools that I want you to be able to use and apply inside your own trading systems out here, whatever it is that you trade and whatever time frame it is that you trade. So even yesterday with Apple out with its earnings report, and we had that big thrust down, quite wide price spread in the in the first 30 minutes of trading. But I have you really pay attention to the bottom of the screen here, to that relative strength, to getting into relative weakness, and getting into the oversold territory. So you're looking at an intraday chart, and when you get down into those extreme levels. And by extreme level, what I'm referring to is getting down below 30 on the oversold and above 70 on the overbought level out here. And when a equity does that, or a currency or anything that you're trading does that, it's got to work its way off eventually. And usually it's sooner than later. And it does that either by moving sideways to moving up out there. And you can see that, in essence, the NASDAQ futures all evening worked its way off, did what it's supposed to do here. And then, right now you've got some nice volume coming into it. And trying to come into where it gapped down. Now, volume-wise, even on the gap down yesterday, you've got some pretty decent volume coming in that wide-ranging bar. And the low that we're looking at is about 27.31. Total volume there was 24,000 shares to the downside. So far, you've got 33,000 shares in this hour here, and we've got another 12 minutes to go in the trading session. Very, very interesting, as Schultz used to say out there. Let's go take a look at some of these other stocks here that are popping and dropping. Well, popping here, you got OSI Systems. So let's go see what they have reported here. Revenue is $194 million versus $188, so not bad there. They did GAAP net income, which I like. GAAP net income, $12.42 million versus 12.3. Earnings per share about the same, 60 versus 61 cents of last year. Guidance here must not be looking good. So let's go take a look at that stock chart and see what it is doing and what it is trading into. And that is OSIS is the ticker symbol. Let me refresh my screen here. Looks like not only did I have a data feed on SUSE, having maybe a little bit of a struggle here. Man, this is nasty. Is this a nasty-looking stock chart or what? Look at this downdraft here, folks. Now, you talk about wide price spread and accelerated volume. Put this one, go print this chart out in the books and say, that's what Steve taught me. That's wide price spread, accelerated volume. This was to the downside, November 15th. Talk about wide price spread from $75.26 down to $58 with 4.8 million shares. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow up 47 points right now. S&P up 3. You got the Russell 2000 leader in the clubhouse up 0.6%, up $5 and a little bit of change out there. Let's see what's the New York Stock Exchange doing here. New York Stock Exchange not giving any reversal confirming pattern whatsoever. That's up $37.24 right now, out at 88.65. And across the globe, as I mentioned, the FTSE having a big, powerful day, up 53 points out there. That has taken out a 1.272 butterfly. Let's go over to natural gas. Yesterday I had a call from David in Clearwater, taking a look at the natural gas contract here. We're looking at the continuous contract. I'm going from the swing point high out here, which was on November 23rd, all the way down to the swing point low that it put in on January 2nd. And what nat gas has done, we now have today, if we were to close like today, you have 3 dojis in a row, 3 dojis in a window. Out there, you certainly have 2 dojis in a window, and after getting to the 0.618 retracement area, so it is truly taking a breather out here. It is losing its way, and when it gets up to that level here, it hasn't given you any information here just yet. It's starting to give you some information to be careful if you are long the UNG out there, because it's either resting to move back, which I think is more likely the scenario here, that it wants to pull back and test at least the bottom of that rising price channel out here. But you'll know where the close. So you don't have to do anything today, but I'll be paying attention to. You got 2 dojis in a row out here, and if price moves higher, then it's going to resume its move up to the 374 level. If price starts to move lower from a close standpoint, then at a minimum it should come back and test the bottom of the rising price channel out there. If we take a look at gold and silver, you've got gold trading back right now $20, $19.40, down 16, trading down to 16.67. You had a bearish engulfing candle yesterday. You're getting some follow through. Now, what gold is going to do, gold never made it up to the 618 level off of its most recent leg, that being the November 23rd, down to the hammer candle of the low of January 4th. So it never made it up to the 618 level. And right now it's going to run into, it's going to try to see if it can find some support here at the top of that January 4th level or with inside that hammer. The bottom of the hammer candle of January 4th, really critical area for gold. That's the level of 1626, because why? Just like in Apple, just like in anything, if you close below a hammer candle, because that is where the bulls are absolutely hiding out. You know they were there at one point in time. The question is, if price moves down there, are they ready to support? And when they're not, if you're long, you're wrong. Where is it that gold would then move to? Well, let's go take a look at the retracement off of the low, coming all the way back to May 16, 2012. That's at the 1526 level, which is where it would likely move to. But let's just take a look at retracement levels, because the next level is 786. That hammer candle, that A to B equals CD, that Gartley buy pattern, which is down there at that 1630-ish level. The exact number is 1626. If that doesn't hold, then the next floor is going to be in that 1584-ish range out there. And if that doesn't hold, then it will come back and visit the lows coming into May 15th out there. So you got the bears. They have shown their cards out here. They always have to, folks. If we take a look quickly here at silver before we head off of the air, silver also pulling back here this morning, creating a evening star reversal candle formation after getting up to that 0.618 retracement. Where is the next level on silver? Silver here acting a little bit stronger than gold from the chart perspective. Silver at least going to pull back to do a dead cat bounce, which is at the 0.382 level, around $31.20. Thanks so much for being here. We're out of time, folks. Remember this, you've got an amazing power within yourself, and that power is so strong, folks, that it'll cure incurable diseases, create a life of abundance, build billion-dollar businesses, paint magnificent masterpieces, and create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, folks. If you're off to start your day, we'll see you soon.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.